Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest. President and CFO Ryan Goepel of Global Crossing Airlines, or GlobalX. GlobalX is a fast-growing airline based in Miami, providing passenger and cargo charter operations. They have a family of Airbus A320s, serving destinations across the U.S., Caribbean, Europe, and Latin America. Since starting commercial operations in August 2021 with just 2 passenger aircraft, GlobalX has expanded to 19 passenger aircraft and 4 cargo aircraft. This is a unique company for me because typically I try to focus on impact companies. And the more I look at this company, I believe there's a great story here and a potential for being an impact play. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a follow-up to a great story and an unusual one for me. I'm going to be straight up honest. I have never really looked at the airline industry as a place that I would want to park some money. Just because it's a very challenging, tough business to make money in. And but I think I found the exception to the rule maybe with GlobalX. It's Global Crossing Airlines, but I'm gonna call it just GlobalX.
Sounds good.
And we've got Ryan here, who is the president and the CFO of the company. This is our second interview, so if you want to really, more of a deep dive into what GlobalX is, how Ryan runs his company and his view of the world, you can go watch the first interview. That one's really in depth. This one is an update, so I don't want to take too much of Ryan's time. He's a busy man. Ryan, thank you for coming in to do this.
No, of course.
Do a follow up. You just had a quarter.
Yep.
And can you do me first? Let's do this. For those that don't know who GlobalX is and what differentiates them, maybe you could give a quick synopsis of what GlobalX does.
Yeah, I'm happy to do it. So GlobalX is a charter airline. So in which case we operate with the Airbus family of aircraft. And so why that really matters and what that means is you hear about charter airlines, you hear about private jets, you hear about smaller planes. We're the largest and fastest growing narrowbody, in which I consider big planes, charter airline in the U.S. We target our plane seats go from 150 to 210. So if you're trying to move 150 to 210 people, we're it. So we're not private jets. We don't do propellers or sign of caravans or King Airs. We fly the Airbus family of aircraft, and we do it on a passenger basis and a cargo basis. We sell the whole aircraft. So I really try and get away from the concept of an airline in the sense of we're an airline in the sense we fly aircraft, but we're really a service company. We get hired to fly people around and we fly the whole plane. We don't do it by the seat. So when you really compare the business models, and we spend a lot of time in our presentations and we spend a lot of time in pitching, none of the metrics used to evaluate an airline really apply to us, but a lot of the metrics that apply to a service company I think apply to us. And so what our metric is block hours. So a block hour is when an aircraft pushes back from the gate, the blocks literally come off the wheels, and that's when the clock starts. And you taxi, you take off, you land, you taxi back to the gate, and the blocks go back on. That's when the clock turns off. So that's what we get paid for. And the advantage of that is because we don't publish a schedule, we don't block off unless we're hired, right? So one of the bigger risks in airlines is you fly a flight that doesn't make money because you have to fly it because you've scheduled it. And so in order to overcome that risk, and the way that's been addressed through all of aviation history is through scale. You build up this massive infrastructure, allows you to, you'll have profitable routes, unprofitable routes, you have feeders, you have hub spokes, you have loyalty programs, you have all these augmentations to kind of offset that. We don't have to offset it because we only fly if we're paid. Now, our biggest risk is, do we fly? It's kind of like, because we fly heavy assets that are expensive, do we fly enough hours? And that's our utilization metric. Do we fly enough hours to pay for all the stuff it takes to fly? And so we look at average utilization per aircraft. We look at how many block hours we've flown. We look at our revenue per block hour. So when you think about those metrics, it's not different than a service company or even a restaurant, which same-store sales, or a law firm, which is billable hours, or accounting firms that have billable hours. And traditionally, and we went public because our founder was not a big fan of the private equity, the private money route. We went public immediately. Companies and charter airlines like this are never public at this size. It just isn't in. And given kind of my experience, I get it. I get why. I think that's the case, but I think that makes it a unique opportunity. Is companies at this size, at this stage of growth, at this point, generally aren't available for public investors, and so, which is why not a lot of public investors know how to value us, how to look at us, what to think about us. They just hear airline, they think Delta, American, and they're like, I'm not touching that stuff because that's a macro play, right? Like, if you think about those airlines, they really trade with GDP. They're kind of a GDP play if you think about it.
Yeah.
We're a niche play, a niche service company. We're not a GDP play. We're definitely and how well do you execute on your business model play? And so that puts me in a weird dynamic, because the people who invest in airlines don't know how to look at us. The people who invest in small cap companies don't know how to look at us. And so because they don't know how to look at us, they don't. And so I think probably this is what happens. They go, oh, I don't look at that. And I go to them. And so what ends up happening is the people who do look at us, the people who do the research, who go through, we have all our files, everything's public. We've got Ks and Qs and current, we have a track record going back 3 years. We've got countless podcasts, videos, YouTube. Those who do kind of take the time and look at us tend to get pretty excited about the opportunity and the potential of what we've created. But until then, it's kind of that kind of just grind it out one by one conversation that you got to do.
All right, so would it be fair to kind of call you like an Uber? You're like an Uber for the air, or no?
Yes and no. Like, we love to use Uber because that feels like a similar, like that everyone goes, oh, great, you're the Uber of. The difference is we actually own our planes and own and our pilots are employees.
Right.
Whereas Uber is a gig thing where they would go to, you can't run an airline like that.
Yeah.
But it is similar in a sense of you get the whole car.
You're right.
You don't get a seat in the car, you get the whole car. And we go exactly where you want to go when you want to go. And
Yeah.
I think in that way it's similar.
So, the reason that I've recently had, because I've traveled around a little bit, I had this one airline that's apparently up and coming that is apparently getting some traction too, because everybody is talking about, you got to check this out, and yeah,
Mhm.
the flights are a little more, but you can show up like 15 minutes before the plane's going to leave, and you go through a little, I guess they monitor, they wave something over your bag, and as long as it doesn't have an explosive in it, you're pretty good to go.
Assuming they wave it over a bag.
What's that?
Yeah. Yeah. The screening is a little lighter, but that's fine.
Yeah, it's a little, but that's also the pain point for a lot of these people that I speak with, right? Because I literally had an experience. I was at the airport 2 hours early.
Yeah.
It was slow getting through security.
Yeah.
They didn't have enough bins. They didn't have enough people that were screening people. So, I mean, I'm looking at my clock, and I'm like, holy shit, I might not make my flight, right? So I'm running through the airport. I get to the gate. I'm 13 minutes till the flight leaves, and gal says, "Did you miss your flight?" I said, "I don't think so." And she said, "Going to Reno?" I said, "Yeah." She said, "Yeah, you missed your flight." And I mean, I said, "You mean the one that's sitting right there?"
Yeah.
And she said, "Oh, no, we closed those doors at 15 till, and we can't open them." I was so pissed, man. I
Yep.
mean, I literally had to go down and buy another flight from Southwest to go to Reno because my next flight to go to Reno was at 7:30 at night.
Yeah.
The meeting's over. I
Yeah.
mean, there's no way I could, that's
Yeah.
not going to work for me.
Yeah.
You know, that is a huge pain point. You also, I mean, it's different because you
Sure.
still are, you have the rules that you have to follow because of the size of the craft, right?
Yep.
Okay. But maybe you can run us through how it is similar though.
Yeah, so if you talk when I worked in scheduled service, you go through the customer journey, and if you map up the customer journey, one of the largest pain points is the airport experience, which is a frustration, I think, for airlines because they can't control it, right? Um, However, for us as an opportunity, if you're a sports team or if you're a corporation, you're doing your incentive trip, you're going to award the sales team to go to Cancun for the week. The ability to go to an FBO or go drive a bus right up to the plane and get on the plane on the aircraft is one of the things we can provide, right? So people like, why would you charter a plane versus flying commercial? Well, we can we can help address that airport experience. And by the way, we don't leave until you're ready. It's not like we say we gotta leave it. Now, when you look at our on-time performance, some of the times it's not like you would see in a scheduled carrier because sometimes the game goes into overtime. If the game goes into overtime or they're celebrating the win in the locker room a little longer than we expected, we don't leave. Right? We don't say, "Hey, the door closes at 6:45 and fly the plane empty back." We wait for our customer, right? And that's what they pay for. They pay, to steal slogans. At Burger King, we said, "Have it your way." That's kind of what we're doing in the charter space. And that's one of the reasons private jets and the private jet charter market is so popular is people who have the means to pay for it will want that convenience. We just do it on a different scale, right? And so if people wonder why our market exists, why do people hire us? Just think about what we can provide from a value standpoint in the sense of we can avoid the airport, we can mitigate or modify the airport experience. We kind of go we go on your schedule because you own the plane, you own that plane and that schedule. We go when you want to go, and that flexibility you just can't get from the big airlines, which means we're a different business. We're a very different business than Delta and American and United. We're very
I,
different.
I think that is the biggest, I mean, that really defines why. I mean, look, I think that's a great example, right? You take a football team to the Super Bowl, they
Yeah,
win, they're
super happy,
celebrating.
champagne. Yeah,
Your plane takes off. Sorry,
yeah.
guys.
Sorry, we had to go. You said you wanted to leave at 10. We're leaving at 10. Conversely, when they lose and they want to leave faster, we leave sooner too. We're not celebrating. We want to get the hell out of town. We just want to go home and feel bad about ourselves. Can we go now? We're like, yeah, let's go. Wheels up. Let's move.
That's the perfect example. If you don't get what they do now, you'll never get it, right?
Yeah. Right. And you think about some of the customers we talk about. We talk about the U.S. government. Their needs, desires, times, and schedule are changing daily. You look at sports teams. You have an idea of what they're doing. We do fly for other airlines, and so in that sense, we are effectively a scheduled carrier, but it's their schedule, and it's our job to meet their schedule. But we have the ability and flexibility to do all of these things.
And that's why that's why I think this model it's a service company. It's not an airline.
And the nature of most well-run, scaled service companies is they generate a lot of cash, right?
Right.
I think one of our features, one of the things we hype on this quarter is we generated close to $9 million of cash flow from operations in a quarter, right? And so that's a good quarter for us. We had our third quarter in a row of over $5 million of EBITDA. We've had, our year-over-year profit growth was 2x. Our sequential profitable growth was like 40%. Our year over year EBITDA was 50% growth. Like,
So was this quarter, are you seasonal at all?
yeah, see, a bit seasonal. Q2, for a lot of airlines isn't great, but for us it is. Q3 is busy, but September is always a down month.
Okay.
So Q3 is probably, if you're thinking about seasonality, you could look like last year, Q3 was our worst quarter. But Q4 was our best quarter last year, right? So there is a seasonality to our business. So I think it's important to look at year over year results, not just sequential.
Okay.
Uh, but the flip side is because Q3 tends to be weak in September, you do a lot of maintenance. So when the peak hours come, you can go get those peak dollars.
So I guess another gate or a really good way for people that do start to follow the story. Do you how do I say this? Your customers that you have, you probably don't want to reveal who your customers are, I would imagine, right? Because you want to keep on to who you have,
Well,
right?
I think I'm not worried about people taking our business because no one else can do what we do as well as we do it when we do.
Okay.
I think there's an expectation. I don't know if privacy is the right word, but there's an expectation of, um, yeah, privacy. When we're flying, whether it's celebrities or government or others, they expect us to do it quietly and do it well, and do it
Right.
safely, do it on time, do it efficiently. And I think, we talk about our customers. There's countless slides in our presentations and meetings where we talk about it. Um, but I don't like to, in the sense of we talk about how many hours and who we fly for and in a general sense, but not like when we talked about college sports, we did 12 of the top 20 men's and women's basketball teams last year, right? But we didn't name the school. We don't necessarily name the schools.
Right.
We did almost probably half the March Madness flights, a quarter or a half. There's a lot that go on with March Madness. So we don't really talk about that. We talk about, 8 aircraft of the US government that are pretty busy. We don't talk really beyond that. And so,
Do you, I guess the thing that I would be looking at if I was Ryan, I'd be saying, are we growing the list of what we can call customers, right? I mean, these not just the one-time guys, but
yeah,
like,
recurring, stable, long-term customers.
yes,
Yeah. Yes. And I think there's two ways we contract. One is charter, which is an all-in price, which includes fuel and ground handling and those sorts of things, which has a lot of costs that are really passed through, not margin. You don't really get margin on them. Those tend to be one-off flights. When we talk ACMI, that's kind of like those contracts will be minimum guaranteed hours in a month, a set schedule, a set amount of hours. And if you look at our 84% of our Q2 was ACMI, which is long-term repeat, steady customers. And that's indicative of a healthier charter airline because that means you've gone away from the one-offs and moving into stable or longer term customers. But those one-offs all exist and they're all out there, and we can use that to fill in the gaps when we have gaps in the ACMI stuff.
right. But the number that would matter to me as the investor is those sticky customers because I
Yeah,
think once
we have a very, very high rebooking rate. I don't know how else. I could say if I look at all the hours we flew in Q2, 84% of them were repeat customers.
right,
But we also have charter customers, but it's like groups that do a spring break trip, or it's groups that do a Thanksgiving trip. It's groups that do an annual trip to Greenland. We get those, but they're like 2 or 3 trips a year, every year, but once a year. And, if we can deliver on time, forgettable flights, which we talked about in the first podcast, they'll call us back, right? They'll call us back because we weren't the problem.
right,
Yeah.
right. I
When
mean, I
people
think
book a vacation, the flight isn't the feature. It's the necessary evil.
exactly, exactly. And I think if people, while it may seem like, oh, this company is being extravagant, and no, they're actually being, I think, because if your employees or whatever have a much more efficient experience with the flight, right? I mean,
Yeah.
that's a bonus all the way around.
Well, think about it this way, like for football teams, right? If we can fly back after the game versus them having to go back to the hotel and fly out the next day, how much does that save them in a season on hotel rooms? If we can fly you direct to your small town, because a lot of colleges aren't in hubs, versus connecting you commercially, and I can get you home in 3 hours versus 10, how much is that worth?
Right.
Right. And so that's why our business exists. And there's a market for this. And we estimate it's, $10 billion, including different sides of aircraft and cargo and stuff like that. And we've got 200 million of it, and we're growing. And I think there's a lot of market for us to still go grab and grow and maintain these growth rates. And oh, by the way, we're growing this business without diluting the company, not diluting, but diluting the company. And we've managed to, the last time we raised capital was August of 23. And we've managed double, if not triple digit growth rates since then without spending money, like without eating our own cooking, as I could say. So we're constantly reinvesting, which is allowing us to feed this growth machine, which I don't think you see in a lot of growth companies. They're usually pulling down extra money all day, every day.
Yeah. How many planes do you have now currently, Ryan?
18.
And what's the goal? Where do you want to go?
So I think of them in blocks. So we have 5 aircraft we've targeted to onboard. We talked about it in our earnings call over the next 4 or 5 months. My goal is to add 4 or 5 a year for as long until, and here's where the growth is going to be, right? So I've said there's about a 30 passenger aircraft market domestically, and we have 14 passenger today. So we can still double domestically, I think, and be a viable business. The great thing about that is there's not a lot of competition in that US based market. So that can be our fortress, right? That can be our base.
Okay.
I think the longer term growth will come internationally. So what we do, we can repeat anywhere around the world, right? And that's a 700-800 aircraft market that we can go play in. Just depends on the region we go to. And then I think on the freight cargo market, it's a similar 300 to 500 aircraft market that we have 4 aircraft in. And if we're at, what's our run, our 60 million a quarter revenue with 18 aircraft, what's it look like with 40? What's it look like with 80? What's it look like with 100? And there's other airlines out there you can see with that size. And, our market cap's 35 million bucks, right? So, a platform, if you want a platform, if you want a scalable business, if you want something that generates a lot of cash once it's up to scale, there's not a lot like us out there as an opportunity. Unless you're, I don't want to be flippant about it, but a lot of the small cap stuff are lottery tickets, right? You're betting on a trial or or something to come in, or a changing consumer behavior. You're going to buy something very differently, or a new technology is going to be adopted. And having spent, a lot of time in oil field services dealing with new technology adoption, that always takes longer and is harder than you think, which is why a lot of people get disappointed.
You are preaching to the choir.
It
Right now.
costs 3 times as much and takes 3 times as long every time. And so, which is great. I think there's a market for it, and I think there's an investor type for it. But I think we're different. We're different. I like to say we're differentiated, which is important in this space. And we're just not. I just don't think we're well understood.
Right. That is the case, right? What about your debt? How does your debt look?
So we have debt in the form of aircraft,
Yeah.
so those, and we have them in the form of leases, and we actually purchased our first aircraft, so we have actually an asset on the balance sheet for that. So it feels leveraged because it's a lease business. But if you think about it, I have probably 100, I can't remember, 100+ million in lease debt, tying up, $300 million worth of assets, right? Which we can't put the asset on the book because it's a lease.
Right.
Straight senior secured debt, we have about 35 million. And that's the money we pulled in August of 23 to kind of fund the growth. And it's funded the growth today. And that's kind of where we're at.
Right. So I guess that's another thing to kind of drive home. Yeah, it looks like you're stretched. I mean,
Levered is the
what
word.
can go wrong, Ryan?
Oh, it's
What keeps you up
aviation,
at night?
everything. A lot of stuff keeps me up at night. I think the first and foremost thing that keeps me up is ensuring we're running a safe operation, right? And that requires an attention to detail. We're a highly regulated business with that. You know, if you think about what we do is we transport thousands of people a day at 40,000 feet in a metal tube going 700 miles an hour, right? What can't go? You know, we make sure nothing goes wrong because that's the most important thing. So that's what keeps me up at night first. The second is having enough work to manage, having enough high enough utilization on our aircraft that we continue to make money, right? And so, and if you do those two things right, I think it's a great business. But I think operationally, you know, we need to execute on this stuff. We're executing every day. We're doing 50 to 60 flights every day. And we need to execute and be, I don't want to say be perfect, but you have to be pretty damn good at this to do it well. And that's what keeps me up.
You have a, do you feel as though your employees are very different from like the employees of a standard airline?
I think because we expect a lot more of our employees because you have the difficulty of the job combined with uncertainty, right? Because we don't have a set schedule, it's really hard to plan and it
Right,
stuff changes all the time. So it's someone who's comfortable with that level of variability. So people love it, like they get bored otherwise. And then there's other people who don't like it or are just not, that's not what they want to do. So it's finding the right employee, much like the right investor. You know, just straight taking someone from a scheduled carrier doesn't necessarily automatically translate well to our business model.
right.
Um, and it takes years of kind of going through people and figuring out how to screen properly. And not that the people who don't work out aren't talented or smart or good, they just don't want to do that kind of work.
Right.
And they kind of go in thinking it's one thing and they find out it's something else. But I think every day our team gets a little stronger, a little better fit for purpose, a little better wired for it, for what we do. And I hopefully that's manifesting itself in the results.
And how do you take care of your employees? Somebody joins
Yep.
GlobalX. Do they wind up getting shares in the company? Is there any kind of a stock option?
Yeah, so we don't do stock options. We do some are restricted stock because I don't want them to be punished for the market tanking because stock options can go worthless, right?
Yeah,
So they're for people who participate in our restricted stock program, they're all 3-year vest. So it's kind of a retention tool because we do not pay top market. We're a startup from that perspective. But from the very, very beginning, we had an employee share purchase plan that everyone could participate in. It's through payroll deductions and they get a discount to market and we have a look back. So they get the lower price at the beginning and the ending of the purchase period. I'd argue it's one of the most generous kind of employee share purchase plans in aviation. When you look at the features of it, and you have to get really nerdy to get into the details of why I say that, but it's the most generous and it's incentivizing employees to participate. And I'd say 40 to 50% of employees have participated. So they take up to 10% of their paycheck and buy shares. To the point now where I'd say between the RSU program and the employee share purchase plan, over 10% as employees is between 5 and 10% of our employee owned shares. And so, and we do that so we're all aligned. We all have the same incentive.
yeah,
And really, you know, you think about with flexibility comes inconvenience in people's lives. And when you ask people to be inconvenienced, you have to incentivize them to want to be inconvenienced. And part of that is participating in the upside if it works.
yep. And I love that, right? Because I think it just makes a more cohesive unit that has the same goal in mind, right?
And yeah, and we've had this employee share plan since the very beginning. It was one of the first things we did. It's probably one of the best tools as a public company for aligning and motivating. I joke, you know, given where our share price has been and how it's performed, so you know, we have all the worst parts about being public and none of the good. But this is a good, right? Like, you know, if I was to carve out, this is a good because it gives me an opportunity from everyone from a baggage handler all the way through to a captain, from a, a purchasing person all the way through to an accountant to a CFO can participate in the equity upside of what we're doing.
Yeah. And I think that's critical, right? I mean, because right now, maybe the stock is not reacting the way you would hope. I think that I think that the fact that you have a $35 million market cap and you have how much do you own in plane? How do you have one plane? What's that one plane worth?
So we purchased it for about 15 million and we were able to 100% finance it effectively. And on a 6-year note at 8%. So at the end of 6 years, that plane will probably be worth $6 to $8 million or 6 million. Let's say conservatively 6 million on the books, and we'll own it
Yeah.
clear. We have the other 17 aircraft which are leased. The combined value of those 17 aircraft are probably 400 million-ish. And we have 120 million of lease debt against it, but we get to use that asset to make money. Right.
Right.
So that's why you need to understand that's a level of kind of detail into a balance sheet and an income statement that not everyone has time to go through and really appreciate. We are taking, a $500 million worth of assets and generating revenue from it. And that's with other people's money. Most people think that would be brilliant. Apparently that's not great. For us. But that's kind of what we've created.
Right. So $35 million seems to be just a little underappreciative of what you've got going on there.
Legally, I cannot say whether that is good or bad. Leave that to you.
I can say whatever I want, Ryan.
Amen. That's why I love being on this.
I would say that's just a little off mark. Actually, I would say that's a lot off mark. I can say whatever I want, Ryan.
Yeah, I would. I'm not arguing with you.
Yeah, I mean, look, I love your. Let's talk about. Look, the company's has had a history that is interesting, right? I mean, different CEO with the different. You've been around for a while here
At the beginning, right since day one.
Yeah, and interesting, different takes of philosophy on how you run a business, right? You have a very good philosophy on how you run a business, right? Based upon what
Like
was
this so far. But I'd say it's always evolving. I think it's hubris to think you figured it out. And as the company grows and evolves, your kind of management style has to evolve, right? So people say, "What's your management style?" And I'll be like, "Well, what style do I need it to be to get it to work?" Right? So I think there's some managers who come and say, "This is the way I do it," and they kind of have this and they rigidly apply. I kind of am constantly evaluating. Okay, I've got 700 people here. I know where we need to get to. What approach will get us through the next 3, 6, 12, 18 months? And that could be, is it very hands-off? Is it very big picture? Or do I need to be a hyper micromanager? Do I need to curse? Do I need to be nice? Do I need to buy pizza for the staff? Or do I need to show up with a stick, right? Like there's every day and it comes up with something different. And I think you have to be, in my position, constantly evaluating, am I doing it right? Is this the right approach? Especially in a business that's changing so much. Now, if we are a stable utility, kind of the business is on rails, it's super efficient, that you don't need to be constantly evaluating. But if we're constantly growing and changing, and the people are changing, and the market's updating, and the market's dynamic, you have to be dynamic too in your approach. And so, yeah, I think the philosophy we've had in the last 12 months is simplify. And I think that's still the approach going forward is this is complicated and difficult and hard. And we don't have to make it harder by complicating it ourselves. And so how do we kind of really simplify what we're doing so we can do what is hard well? And then as we get really good at that, you kind of what we call personal growth or company growth, you start expanding beyond that circle. And I still think we have the opportunity to focus on what's simple.
So I'll go back to the first. I loved it when I asked you, what's your goal, and you came back and said, I want to have the most forgettable flights
Yeah.
ever.
Yeah.
Right.
Yeah.
because the if you ask anybody to tell you their top three airline stories, I guarantee you're going to hear
Well,
one like I just
you
had.
just told me yours. You're never going to forget that flight to Reno.
I'll never forget
Ever.
that flight.
No,
Never.
never.
Right?
But the flight you did took, you've already forgotten about.
So you're right. When you say I want it to be the most unforgettable flight,
Mhm.
that is the perfect goal.
Yeah,
Right?
and that's hard. Like, it's no
That's
surprise. That's hard. So we're not aspiring to do something that's easy. We're just aspiring to do something that's really, really hard. And it requires a level of perfection, attention to detail, and discipline that not everyone has.
I mean, it would be really. How cool would it be if you had asked somebody that question and they actually had three global X positive stories, right?
Yeah. Well, and we do get a lot of positive stories because a lot of times we're doing, especially when we're doing rescue flights, we're the white knight that kind of shows up and says you're getting off the island, even though your plane's shut down. Um, and so in that case, you get to be that hero. But again, aviation's hard. In order to operate a safe operation, there's so many redundancies, and if anything isn't perfect, you don't go, right? You don't go, and
Right.
so that makes it hard. When you're flying planes are this big, it's not like, that prop plane in Indiana Jones. You're like, just put some tape on it, we'll be fine. No, you just don't go. And so that level of perfection over something that's very, very difficult to perfect is hard. But that's okay. That's, if it was easy, everyone would do it. And the person who solves the most problems makes the most money.
So I want to touch on one little thing real quick here before we wrap this up. But I brought up that airline that's doing these, and
Hmm.
one of the things is that people show up 15 minutes and the security is more lax. Which, when you and I talked about it before we got on this,
Sure.
isn't necessarily a good thing because you're getting on a plane with like 30 other people that may not have like the best intentions in the world.
Just need
Right.
one with bad intentions. That's why we have all these processes in place.
Right. So so it may not be like the best, but what could be, and that is drawing attention from the majors, right? The major airlines.
Sure.
So this particular airline may not be able to continue doing what they're doing for a long duration, right? They're going to get some heat. But we talked about the fact that maybe one of the smart things and a possibility for you for growth would be have somebody like that fly your flights, right?
Well, us fly their flights, right? And so, one of the benefits of charter is we can be the tip of the spear on any new business idea because we can deploy aircraft on a short-term basis to prove out so say you wanted to start a route or an airline or you wanted to do something different, you may have to invest tens, 5, 10 millions, if not tens of millions of dollars in that concept before you find out if it works. One of the ways we're useful is airlines could use us in the sense of, okay, I want to try this route or I want to try this thing. I can hire Global, they can run it. We could see if the economics works before we devote the real resources to make it a permanent kind of idea. And that's not a big part of our business, but it's part of what we can do and have done in the past. And as we talk about, the thing about, that other airline and kind of their security and the screening, that's not our fight. That's not our, that's not our, it's not our fight. That's not our market, but we are a solution in that space, which is great.
Right, right. So I just think that it's important for people to understand that there are other opportunities for Global X that if it makes sense, right? Uh, it's just another area for you to potentially make some revenues.
Yeah, like when I talk about opportunities but the thing I caveat that with is the keep it simple message, right? Like we don't want to grow to too many different concepts too fast. However, when you think about aviation, and I've used this analogy a bunch of times, if a aviation market um, is a fishbowl, and it's a billion-trillion-dollar fishbowl, the major carriers are the marbles, we're the water, right? So if you put a whole bunch of marbles in that fishbowl, there's huge, but those gaps between the marbles are billion-dollar gaps. And
Right.
that's the niches we're gonna go play in. And there's not a lot of small caps playing in billion-dollar niches.
Right. Right. I mean, look, this is a good story. Maybe people see airline and they get spooked away, right? Take the time, Ryan. I'm sure you're for serious investors. I'm sure you're open to having a conversation, right?
I do. I talk to anybody and everyone. And the great thing is I don't really need to prep for it because I've been talking about it for 5 years. So there's
Right.
nothing you can ask me that I
And
don't.
you've loved airplanes since you were a kid.
Yeah, since a little kid, I had the model airplanes in my house, the hanging from the ceiling. I was going to be a fighter pilot. Turns out you need to have good vision for that. I did not. But yeah, I've always been fascinated by planes, been fascinated by the industry. And it's an industry you have to really, it's you, there's, I call it the Hotel California of industries because once you check in, you can never leave it because everything else is boring.
Yeah.
And it took me a long time before I got an opportunity to start working in aviation. Before that, I did oil and gas, thought that was too easy. And so I decided to transition to something harder, which was aviation.
I love that. I mean, I love the whole thing, man. I like the story. I like what you're doing. I mean, you could say that how is this an impact company? In all actuality, it is an impact company. I mean, it's providing a service that people clearly there is a need for, right?
Yeah.
And I also think it does benefit the environment in ways. So
We meet a demand that's real and exists. And I think if we can, we meet a demand that's real and exists. And if that didn't exist, the company, this concept wouldn't exist. Charter airlines have existed since the beginning of airlines. They've always been a part of the ecosystem. They just haven't been publicly traded. They just haven't been, and they aren't really. We're it. Sun Country has a big charter group to them, but they have a very specific niche in charter. But if you think of any of the other real charter companies that outside of private jets, they're not public companies, which makes us kind of an odd duck.
So real quick I know you do the passengers, but do you also do shipping? I mean,
We do. We have 4 dedicated cargo aircraft, so they're cargo aircraft. They can't take a person.
okay.
And we have 4 321 freighters, which we think is the most efficient narrow body freighter aircraft for packages, right? Which would be U.S. Mail, DHL, Amazon. We think our cost per mile per square foot of space is the most efficient aircraft in the world, and we're the only North American licensed operator of this aircraft.
Okay. And how do you get customers for that?
We will go to, so we don't sell, we sell the whole aircraft. So we'll go to freight forwarders, we'll go to package carriers. Like, for example, we just renewed our contract with DHL. They're one of the elephants in the room on this. We'll work with one-off groups who have like cargo lines. So freight forwarders we'll sell the whole aircraft and then they'll sub the slots. They'll sell the seats, put it that way.
Okay.
If you think of a cargo aircraft, it has slots and square footage. We don't sell the seats. Each of those slots is like a seat. We don't sell the seat. We sell the whole aircraft. We let someone else worry about the risk of filling it.
Okay. I'm trying to think. I've got a close friend that's like an importer from China.
So they couldn't use us in the sense of we can't fly the Pacific, right? Our range
Okay.
isn't long enough. But say they landed in LA and they wanted to send one load to Chicago and they want to send one load to Kansas and one load to Miami, they could hire us to do that leg.
Okay. Interesting.
But they'd have to commit to the whole aircraft. And so a lot of the times they'll just go to they'll go to FedEx or DHL or UPS and sub it out to them, and they'll use their hub and spoke network to go do it. But there is a market for narrow body charters. I think the market has had surplus capacity for the last couple of years. It got built up massively during COVID. And it's kind of regressing to the mean. And I think as it regress, the unit economics of our aircraft are so unique and so valuable, they'll eventually make a difference. And it's a huge, huge business.
Yeah. I mean, I'm just thinking about my buddy, he the projects that he works is construction. So
Mhm,
having a full plane
mhm.
wouldn't even be an issue,
Right.
right? I mean,
Yep.
so that's where it gets really interesting. Okay. All right, Ryan, anything you feel as though I've missed?
No, I appreciate your attention to the story and trying to raise noise, raise awareness. And, like I said, we're just going to keep executing and try and work to keep growing. We're going to add aircraft by the end of this year, which will kind of be what I wanted to do was have a trailing 12 that showed a good number. Because we have never had a trailing 12 that was good and positive. And then now that we've kind of established that baseline, our next phase for next year is growth. And so we'll grow into that next year, and we'll just kind of keep this thing pushing forward and moving, and hopefully that's it. You keep it simple.
I think the biggest takeaway here is you've said what you want to do,
Mhm.
and you've executed and done what you said you were gonna do. Yes?
Yes, and I want to keep doing that.
And and eventually at some point the market, somebody is going to see that, start figuring out the numbers,
Mhm.
right? I mean, and the math should help people see that this is an undervalued play.
It's definitely an opportunity.
There you go. All right, you can say it's an opportunity. All right, Ryan, I want to thank you for taking the time, man, and we'll what do this maybe when do you think we should do a follow-up?
Probably in the new year at the latest, because then we'll have the new aircraft and we can sort of talk about the plans for 26.
Okay, perfect. Works for me, man. All right,
Awesome.
thanks for doing this, Ryan. Thank you for tuning in to another executive interview here at Alpha Wolf Capital. Today we had Global Crossing Airlines President Ryan Goepel. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.